CrowdStrike is down. See, that's another one. I'd like to buy some CrowdStrike if the market itself gives me a larger pullback. This would be on my list of stocks. You can see CrowdStrike has been actually getting killed. This is a cybersecurity company, and that is an area of the market that, if you know my stock interests generally, a couple things that I really like. I like software companies. I like technology mostly. I think like that's the millennial thing to do, but I really like the upside, the growth potential for tech stocks, for companies like that. But that's a careful game you have to play, because tech stocks also get valued the highest. And so when they have true downturns, they are much, much nastier than a lot of other areas in the market might see. Anyways, I also like medical device companies. Here's like Intuitive Surgical, a company that I would have loved to, or I would like to buy some shares of at some point. So there's some interesting stuff happening in the stock world. But again, the big one today, CrowdStrike down. XP, did they have earnings? Did they put out the earnings? They did. Earnings were better on the bottom line, but worse on the top line. Must have had some sort of guidance that was not super exciting. Nvidia, Medtronic, Wynn Resorts. These are just some of the companies that I want to watch if we do start to see a larger, broader pullback in the markets. Those are some stock shares I'd like to add for the long term. Not all of those, but some of them I like more than others. So, what level would you buy on gold right now? I would not buy anything. I'm waiting. I kind of have to see what price action does throughout the day. If I take any position on gold, I will share it inside of the VIP room. Yeah, the dollar yen looks interesting, but I don't really have a bias on this one. Dollar yen, I think, is like a neutral reading on the Edge Finder right now. So I really don't have anything to do with that one. Let's see. Yeah, the euro is getting a bullish reading on the Edge Finder, but I don't have anything to do here. Also, I'm very curious. We're going to see some scores move around here this afternoon, because this afternoon we get the commitment of traders data, which will show us what institutional money is up to. What are they buying this latest week? What are they selling? Where's institutional positioning overall? Let's also have a look at retail positioning. This is really interesting. So we've got S&P 500, euro, pound. These things, according to retail traders, are more on the short side. So these things are being sold by retail traders. At the same time, you have some things getting more bought by retail traders. Then we get a contrarian signal on the Edge Finder for this metric. So when you see heavy buying from retail, it gives us a more bearish bias. And when you see heavy selling by retail, it gives us a more bullish bias. That's kind of the way our system works on that. USD-CHF, what's the reading on the Edge Finder? I think it's neutral now. So when I took the trade, it was a bearish setup, and I believe USD-CHF, yeah, is neutral now. So this is a good example. Sometimes people will ask, well, Nick, if you are in a trade and the Edge Finder changes bias, what will you do? Usually, almost always, what I will do is, if the trade is like moving in my favor and I'm just trailing stops, I will just continue to let technicals play out. So I'm trailing this stop. If it keeps moving lower, then great. If it reverses, then we're out. But the bearish reading that happened over here ended up being really nice push lower. And now I'm just trailing stops on it to let it run if it wants to.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I was watching actually gold and also Nasdaq and S&P 500. I was not actually on currency pairs. So yeah, mostly we just saw stock markets actually selling, but on Nasdaq, to me, it was not really that surprising. But I have a nice reversal. I think we might have a very nice reversal maybe later on if we don't really break the support that we have here.
Sure. Yeah, and as you mentioned, bit of a first sell-off in the indices that we've seen in a minute that has been a little bit more aggressive, I would say, because we've had a lot of like these tiny little mini pullbacks that just get bought immediately. This is the first time I've seen in a minute or some time since really April that we've seen true selling coming into the market. But to your point, this has been possibly an opportunity, in my view, as well, that there could be some good buying opportunities in here as well. If you looked at April ended up being a really good buying opportunity, and that was a pullback on the S&P 500 of, well, about 6-7%. It was really not huge, but when the bull market is really strong, that's usually what happens. You usually get dip buyers coming in around the 5 to 10% mark. So we'll see if it has more room to pull back first, or if it's going to find support and bounce already. The Nasdaq showing some wicks. I think you had the same kind of chart marked up here, showing some wicks off of this support level already. We'll see if this ends up being a dip buying spot already. But so you're watching the Nasdaq primarily?
Yes, I was actually on Nasdaq, also S&P 500. Actually, we already have a pending order, so already our pending order is just triggered at the moment. At the moment, I think this sell is actually good because we don't really have bad stuff going on except the outage that we had during the day. But when we check the stock markets, everything is fine. Plus, when we check when we check interest rates, there is a hope that they will be cutting the rates maybe around September. Even though we had this reversal, but I think we already have some good news. Then I think people, they were just taking their profits before going up again.
Sure. Yeah, and I guess on the same, while we're talking indices, Kenzo, what are your thoughts on the other ones? So other than just the Nasdaq, maybe the S&P 500 or the Dow Jones, what do you think about those? And is the Nasdaq your favorite setup of the three?
Yes, but I think S&P 500, it's a very, the structure is quite clear. The one that I'm still waiting for to reach maybe the support area, it was US30. But on S&P 500, on my side, I think everything is quite clear, and the reversal was not really aggressive as the way we saw on a Nasdaq. So I'm expecting to see maybe a nice reversal from this level if the market respects that zone. Already we have a pending order on that zone. You can see that. So this is the one that I feel like it's quite clear. So on US30, now I was waiting for the market to reach this area, but it seems like the market just reached there because I think the market was here. So we reached this level that I think it might be a potential resistance if maybe we go on a smaller time frame. So I think the market might reverse from where it is at the moment.
Yeah, and the Dow Jones saw a huge push higher here recently, Kenzo, because of the rotation trade, right?
Yes.
A lot of excitement about possibly other companies joining the rally. At least that was the hope. We saw the Russell 2000 really explode higher off the CPI day, and there was some continuation. There was this idea, okay, we are seeing inflation cooling. The Fed is likely to cut interest rates, and that could spur growth for some of these companies that have been left out of the rally, specifically some of your blue chip companies that are in the Dow Jones, the Russell 2000. So that's why I asked about that, is I was wondering if you're more of a let's stick with big tech kind of guy, or if you're more of a let's go to the ones that have not seen as much of a rally. Would you, so with the Dow versus the Nasdaq, you seem more interested in the Nasdaq, is that right?
Yes, at the moment, I like that idea because at the moment, that idea of let's say they're gonna cut the rates, so which means at the moment because smaller companies were not performing very well when the rates are higher, so which means once they cut the rates, smaller companies they can now breathe, which means they might take the loans. Now it's time for us to look for small companies, which means Nasdaq, US 30s, and S&P 500. Those companies are already big, you see, and sometimes it's not really easy just to jump on them because their shares are already expensive. So, if I had an option to look for smaller companies or smaller indexes, I was going to check that. But on my side, the option is just S&P 500, USDT, and Nasdaq. So unless if maybe there is a Russell on my side, I don't really. My broker doesn't really have a Russell 2000. If I check, last time I checked.
Yeah, and that's a good point. I think that the Russell is an interesting one for those who can trade it, whether it be on futures. I know we have a brokerage that actually supports our channel here, so maybe we should mention them, Vantage, that actually offers US 2000 to CFD traders. So for those of you who are interested in Vantage, we'll drop a link in the chat for that now, which again, really, really great CFD brokerage for people outside of the US. Anyways, the other thing is, gold here. You mentioned it a moment ago. I'd be curious to get more of your thoughts on this as well. So gold reached an all-time nominal high on an inflation-adjusted high. The all-time high is about 3,200 in 1980s. Fun fact for those of you guys who are interested, if you actually look at gold on a true adjusted for today's US dollars basis, the all-time high was in like 1980s, 3,200. So where we are today, 2,400 sounds a lot lower than that. So I actually think that there is, on a bigger term basis, more upside for gold. I think we have plenty of more, of upside overall. That being said, price action in the last few days has been much more bearish. We've seen some topping tails here and some follow through here today. I'm officially out of my position on this one. So I'm curious your thoughts on gold. Would you be buying this pullback, or would you wait for more? What would you look for in order to get into a position like this?
Yeah, on gold, I'm still very, very bullish. As if we check the overall trend, it's still actually continuing. So the reversal that we have here, I can say it's understandable. The market was already very high. Maybe people, they were just taking their profits. But with the structure that we have here, it might make sense that we have enough room for the market to go higher. Why? The first thing is going to be the rates cuts. Just because now we are going on the rates cuts, that is a good news for gold. So we will see maybe a nice reversal. So yes, we did break the highest level there, but the market is coming back, which is a good thing because it was difficult for us to buy around that level. So at the moment, I had a small, it's respecting this horizontal, let's say it was a previous resistance, now it's a support. So I think the market is moving away from this level. Then I think we'll actually see a continuation of that buy. You see, or maybe I might say we'll end up adjusting this trend just to fit this in. Then we can just continue like that, just to reduce some confusion.
Sure. Yeah, and again, big sell-off today, but to be fair, some of the better buying opportunities have followed these sorts of days. I remember this day was the day that people got really concerned because China sort of issued that they had slowed their buying process of gold for their central bank. Sure enough, that day caused a huge 3% sell-off in the price of gold. And the following day would have been the perfect buying opportunity. So when you get these big sell-offs, I agree, there's probably some profit taking here. But I do believe that the overall trend for gold this year is still higher. We have well surpassed where I actually thought price of gold would go. At the beginning of the year, I put together a fun presentation on why I thought gold could go to 2280, which was this level. And At the time it seemed crazy because we were over here and we did see that huge move, but we saw it get there by like April. So I was like, oh my gosh, I thought that would happen at the end of the year. So now I've adjusted my longer term target for gold, and I think it is, I think 2,500 is a fair checkpoint for us to go test. In fact, I think it's higher than that, but by end of year, I think that 2,550 is very possible. Now that's assuming, it's making a assumption that we do see the central bank cutting interest rates, and that's where I think market data sort of suggests we're going right now. And I'm not a Kenzo, you and I, we know this because we've done this for a long time together. Fundamentals are not a certainties game. It is all about an educated guess on what's going to happen. And as you've mentioned, bullishness on the NASDAQ and gold as well. We've both talked about those two things. The common theme there is that we're looking for rate cuts to carry us there. Rate cuts to for the NASDAQ to stimulate the economy back into a stronger consumer base, which could be good for especially smaller companies. And gold just trades higher on interest rates getting cut. So we'll see. But just wanted to share that thought. The last one I had for you, or question for you, was the dollar index. You mentioned it earlier for a moment there, but maybe for the currency traders as well as gold traders here, I'd love to get your thoughts on the dollar index, either on the technical basis or fundamentals, wherever you'd like to go with it. Just wanted to get your thoughts.
Yes, dollar index, it's been actually bullish for quite some time. So it was reversing, even though it was good for it to reverse. We had some like more than, I think, 4 or 5 economic news which were actually negative, and it was good. But I think we had this uptrend, and mostly we know very well that the market tends to respect the trend for quite some time, you see. So just because they're going to cut the rates or something, it doesn't really mean the market will just immediately react to that. Sometimes it does. Sometimes the market doesn't really react to that, you see. So I think we're still going to have CPIs coming month. Let's say this end of July, new month we're going to have everything. And that maybe might have an effect here. But at the moment, it shows us that whatever that we had as some negative events, yes, they had their run, but it seems like they were not really enough to continue with that bearish momentum. Plus, for quite long, the dollar has been quite stronger. So every smaller event that it's negative, it's not really enough just to turn the overall trend, you see. So, and another thing, when we are going to talk about fundamentals, is just because we have some good news, it doesn't really mean that immediately that is going to be some good news, like the market will be reacting to that. Like yesterday, Netflix reported some positive news or earnings, but the market was just selling. But if we check that nicely, it's just fundamentals. Maybe people, they're just taking out their profits so that they can easily buy, or we can say they just rebalancing their portfolios, you see, just to make sure that they can go back and buy on the lower price, because you can't just wait. Mostly those areas, they were higher, so it's better to take out some profits, and that will have a huge effect. Like now on the dollar index, yes, we know that the things are going to go good maybe in few months because they're going to cut the rates, but the reaction, it doesn't really just happen as positive here or as negative. Obviously, we expect the market to go down, and which means it's actually good for the dollar index, because if it goes down, it means inflation is going down, you see. But the market won't just react instantly. But maybe in the coming weeks, it's where we're going to see the market starting to react.
Very, very good points there too, Kenzo, about just kind of when you look at the dollar index, we've had a lot of kind of turning factors. We've seen the CPI come out. We've seen Powell sound pretty dovish in a couple different meetings. Jobs data has been cool. Unemployment claims have been on the rise. So that's kind of the trend. This move, I would argue, is counter trend to all of that data and all of kind of the overall trend. That's okay for even in a trend, there's going to be counter trend moves. So we may see this big wave, you may see a pullback, you may see, that's how the continuation plays out. So the other thing I would mention that I think is worth talking about for a moment is the rotation out of the big tech companies, your Apples, Microsoft, Nvidias. That rotation is also counter trend. We have to admit that the winners have been the big tech names. So the reason I point that out is that if the winners are the big tech names, and that's been the trend for months and months and months, and now we see other companies joining the party and maybe people rotating out of tech into that is counter trend because it's the new development. Now, could it take root and really become the new trend? Sure. But until it is truly, decisively the new trend, it's counter trend. So my opinion is I also like the NASDAQ. I also like big tech. I like being in the winning players that have gotten us to this point in the indices, more so than I like the small companies. Now, it doesn't mean I think that there's no room for small companies to expand, but I'm a trend follower, and the secular fundamental trend has been stay with the megatech big winners. So I'm kind of still in that camp. I will be buying the NASDAQ primarily as those are weighted towards the big players, for better or for worse. I might be wrong about that. And that's the thing is, that's the beauty of trading is there's people who disagree with me. There's people who agree with me. And that's what makes a market, right?
Yes, and on that, on those smaller companies, as we see bigger indexes going down, most likely that can also be the factor to why we see DXY going up, because those smaller companies, they are now going higher, and there are many, obviously. So which means it's a good thing for the economy also, because the economy, it was not going to be based or focusing only on 4 companies or 5 companies which are bigger. But those small companies, most likely they run economy. And when we focus on those small companies, one way or another, we're going to see DXY going up. And that is actually that's why we see maybe it reversing over there, you see.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.